Hey everyone, it is Evan here from the Trade Risk on Friday, July 26th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to kick things off with our market technicals dashboard. You can see we were green across the board. Russell 2000 and the Nasdaq 100 both finishing the day on Friday about 1% to the upside, and the 5-day change numbers all in pretty strong territory to the upside. The Dow Jones did notably lag this week. It was just over flat here on the week and is still below the 10 SMA. Otherwise, we had new all-time highs for the S&P, for the Nasdaq, and some strong performance for finally a change of pace out of the Russell 2000. If we scroll down, take a look at sectors, we still have the semiconductors out in front, leading 4.5% over the past 5 days, but financials now are on the top of the pile here, number 2 spot, and number 3 is technology. Pretty good, powerful group there to the upside. On the downside, we have utilities, energy, and biotech, both or all three slightly red to just slightly positive there for the IBB. If we look at the 5-day performance from the major markets, we have the S&P 500 followed by the US dollar and silver out in front on the top 3. And on the downside, we saw volatility unwind, natural gas, and gold. So let's jump into the charts. Take a look at what's going on here. We like to start our analysis with the weekly picture here of the S&P 500. We like to use the cash market, and we can see here with this weekly picture that we closed at all-time highs. There is no overhead resistance to deal with. S&P 500 closing at 3,026. That is above last week's highs, and finally starting to resolve this 2.5, 3 week chop that we effectively went sideways. We were just kind of stumbling around between, call it, just over 3,000 all the way down to about 2,975 or so. That's where we were kind of playing in that range, and we finally got this close above it. We'll see if it sticks. We'll see if we can hold on to these gains next week. But the key is that there is no overhead supply. We have the MACD leading again. Long-term trend is still to the upside. So life once again here looks good for the bulls on virtually all time frames now. 29.55, that has been the relevant support that we've been looking at, the intermediate term level that we've been saying that we want to see this market continue to hold above. And as long as it's holding above 29.55, then you have to sort of give the benefit of the doubt to the bulls, and so far that does seem to be the case. We could probably inch this up a little bit tighter now to around 29.70, 29.65 or so, but more or less that is your line in the sand. It's approximately about only about 2.5% away from where we're closing right now. So as long as we stay above here, technically speaking, I think the market's in a pretty strong spot. Again, you can see that MACD is leading, and if we look at the VIX here, I think we got close to the lowest close, almost the lowest close all year. It's certainly, at the bottom end of the range. It almost closed with an 11 handle, but we closed around 12.05. So we've basically given back all of the pop here recently over the past couple of weeks, and we're closing back here at a very sort of subdued, quiet, perceived low risk environment for the VIX. Now, the interesting market here, I think, was the IWM. This is where we actually saw the small caps come to life this week, and we did start to break out from some near-term technical resistance. We saw our good volume day come in on Wednesday of this week as the market, as the Russell was up 1.65%. We gave a lot of it back pretty abruptly here on Thursday. There was no immediate follow-through day, but now you can see on Friday we're back up to these highs here. So the Russell, which we had a position in, we talked about the position we put on back here on Thursday. We were playing it via the TZA actually, so it was the 3X, the TNA, the 3X levered bull is how we expressed that trade, and we actually sold all of it off this week right into the pop here into 64, and then the rest of it was an exit here on Thursday. So we no longer have that trade on, just a quick tactical trade that we were looking for, move back to the upper end of the range. But now that the IWM is looking like it wants to continue up here, we'll look to reinitiate maybe a longer term position on the IWM. That's at least our plan. That's something that we'll be looking at. But for now, when I look at the Russell here, I do think there's grounds or there's time to play some catch up perhaps with the rest of the market. It's gone nowhere since February February of this year. And we do have some, kind of stiff resistance, really this 160 area, 159, 160. That's where we really want to see the Russell break out from, because if we zoom out, you can see that actually goes all the way back to third and fourth quarter of last year. So this is a pretty major spot that the market, that the Russell is now rallying back into. And this is where we're going to want to pay attention. And this is why I say we're sort of looking at maybe a longer term hold here. If the Russell starts to show more conviction that it wants to break through here, then there's lots of juice here in the tank, at least from our opinion, that this could move higher here, perhaps be a second half story for small caps if this can actually start to break through some of the longer term resistance up here. Again, you got to take it one day at a time. This is not something that's going to happen quickly. This is a big level to look at, and this might take another week or two for it to really work through, but it's something you don't want to lose sight of, because when the move starts, moves typically happen pretty quick, and you can be left sort of caught flat-footed pretty easily. So the Russell 2000 sort of still paying attention there. We had a nice kind of cash flow trade with the 3x leveraged ETF. We're out of that position, sold it for a gain, and now just sort of flat and looking at how it handles this 158 to 160 area into the coming weeks. Nasdaq 100 also strong this week. This was new all-time closing highs. Again, line in the sand was about 191 that we were talking about for the past few videos. Sold off right into it. No selling follow through below it, and the buyers just kind of stepped right back and kind of levitated us higher. So the Qs here just up and marching. No overhead resistance for the Nasdaq either. So with all that said, remember we are still in the midst of earnings season, so let's pay attention to those potential landmines as companies report and can affect markets and kind of sway things on an individual and sector basis. Otherwise, again, trends, momentum, all sort of pointing up right now for the bull case. Now let's get into some other major markets. We'll go to TLT here, which pretty much was quiet and sideways this week, despite the rally in the equity markets moving back to all-time highs. TLT kind of, really was unfazed here. It's tried to sell, sold off briefly intra-week, but then it pretty much recovered, and it just really seems pretty comfortable here, moving sideways in between this range. We're getting a new kind of sideways levels to deal with, about 130 all the way up to about 133 and change. That's kind of the consolidation area that we're looking at right now. And, again, let's give it some time. It's in the middle of it now, and it seems like it's just continuing to want to just chop around for the foreseeable future. If we go to metals next, we got GLD here, which also is consolidating right now. It tried to break out a combination of Wednesday, Thursday last week. That was about the high. Thursday was the excitement high there, and then we've just been kind of pulling back into this range here, and it's been just sort of moving sideways here and just making up its mind. Still acting quite healthy, the way I look at this anyway, but just needs perhaps reset mostly through time here, and we'll see if this gets ready for another move in the coming days and weeks. Silver, on the other hand, is still, well, I guess kind of doing the same now. It's basically consolidating most of this move through time here. It hasn't had any steep pullback after the very, high volume breakout that we saw just a little over a week ago. It continues to hold in the upper end of this range. It's not really giving anything back. It's just kind of, meandering sideways and kind of chopping around a little bit, but otherwise it's still pretty much holding on to all of the gains here that it put in just a couple of weeks ago. So I still like the prospects there for both the metals trades. I think are encouraging on both fronts. Now, if we go to USO and natural gas, USO first here, didn't do a whole lot this week. It basically was totally flat, a small inside week, kind of looking like a weak bear flag. Perhaps maybe another leg down is coming. USO here just looks pretty messy to me. I'm not really interested in it one way or the other. We had a pretty, sharp move to the downside just 2 weeks ago. Then it kind of, meandered up just a little bit, very shallow retracement. So if we start to break down here, it could be ready for another leg lower, but we'll have to see if it actually triggers. And natural gas, I've been looking at buying or being interested in a potential retrace here, and it's retraced all of this move that we saw throughout the second half of June, and it really just hasn't put in much life to the upside. It had this just one attempt here on Monday of this week, and then it just sort of gave it right back, and we're almost back to lows. What I do like is the very pronounced sort of momentum MACD divergence up here at the top end of my chart. As we're back to recent lows, you can see a nice divergence, higher low in the MACD that's getting put in, but so far we really aren't seeing any rush back in here to, for the bull case to sort of make another move like it saw in late June. So, until and if that happens, I sort of want to stay patient here. Again, this would only be for the very tactical, active, short-term traders that are really, going to be nimble. Otherwise, all the longer-term trends here are just sharply pointing lower. So you have to know the kind of animal you're dealing with. But, if we do start to get some life here with some volume to the upside, strong close could be interesting for some type of tactical opportunity. So that's it. That's what we have for the major markets. Let's move into sectors now. Let's take a look at what's working this week. It's still semiconductors, and you can see now that we are to new highs. We broke out to new highs this week. It was really Wednesday that just kind of ignited up there, taking out the old May highs, or I guess April highs that we made around 120, just about 120. We broke it by about $1 or so. It's quite extended to the upside here. It's a tough chase, but momentum is working. The trend is working. Bulls remain pretty strong and resilient here in semiconductors, so it continues to be a nice leader, but tough for new entries. Financials now breaking to the number 2 spot, as we talked about at the top of the video. You can see there's a lot of overhead supply that it's basically trying to break through now over this $28, $29 range. That's where we chopped around for all of 2018 just about, and you can see it's working through that now and continuing to march higher here. So this continues to act pretty well here. Series of now higher lows and higher highs. The trend is on, and the chase seems to be on for financials, so a good leadership group for the market right now as well. And then finally, technology was the number 3 spot here. Again, you can see no overhead supply above here. These are all-time highs for technology. It broke out above its April highs several weeks ago, and it continues to act well and trend at new highs. So life looks good here for the technology bulls as well. Now, on the downside, we have utilities, which really, just kind of pulling back to support, pulling back to the bottom end of the range. Looks like we could maybe retest $59. Again, not really doing any big technical damage here. And this makes sense because it was a very risk-on week with lots of, of the higher beta sectors of the market performing this week. So when that tends to happen, you tend to see some outflows out of utilities, out of defensive spots as money gets allocated into more aggressive names. So utilities here kind of right on par, right on cue, so to speak, for what we saw this week. Energy, number 2 bottom performer, underperformer this week. It was down about 0.5%. You can see just mostly moving sideways here. Again, really not changing the technical structure. It's still got this potential kind of inverted pattern here. Really needs to trigger above $64.50 or so, $65. That would get that momentum back to the upside. Until and if that happens, you got to be careful not to get chopped up here. Maybe you're nibbling at the bottom end of this range. Otherwise, a little bit of patience there is required out of XLE. Last but not least is XBI. This is the just flat here on the week, just slightly higher, is biotech. Again, you can see this has really just been chopping around here. It had a couple of good attempts. We traded this a few times actually as this was starting to rally up with a 3x ETF, and we sidestepped. I forget, the last trade was either into here or into here. I can't remember, but we've been kind of just waiting for this to set back up. It definitely looks coiled, so we're going to see if this can start to get some momentum here, and this kind of ties into the Russell 2000 trade, where this XBI tends to be the smaller cap biotech name. So tends, if you're going to start to see Russell move, if you believe the Russell can move, or even vice versa, if you think the XBI is going to move here, then that's going to certainly support the small cap trade that could be on here, that rotation that we talked about at the top of the video. So pay attention to this. Over $87 or so starts to get pretty interesting for a nice little move to the upside. So that's it. That's what went on here this week. Again, double check those earnings dates. We still have plenty to go through next week. It's going to be a busy week of companies reporting. And thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube video, on our YouTube channel, or follow us on the Trade Risk, thetraderisk.com/blog. Have a great weekend, and we will talk to you in next week's videos.